Holy schmoly guacamole! If you're wondering why Tesla stock is down almost 1% here in after hours, I have all of that information that you need to know. Yes, there is news, and yes, you need to know this ASAP. You are sitting at a very important technical level for Tesla. If this level does not hold, things are going to get much worse from here. We have baby mama drama, more of it to report to you guys in regards to Israel and Iran. This tit for tat showdown, if you will, is about to escalate to the next step, and this is even causing the Nasdaq to sell off further in after hours. The Nasdaq, indeed, as well as the S&P, just broke under its 50-day moving average. This has not happened since November 2nd, 2023. And, well, I think we need to talk about a potential market crash at this point, something I've been warning you guys about here on this channel for quite a while. As I indicated in the last video, of course, markets can react positively or negatively or irrationally for a period of time, but the facts of the matter are this situation with the Middle East is highly uncertain, and the implications that this could have to the US economy could be disastrous or could be nothing at all. And that's why the markets do not like this situation. It's a lot of uncertainty, and unfortunately, it's not going away, at least anytime in the near-term relative future. Do me a quick favor before we jump into all of this key information. Hit the like button, subscribe to the channel, and let me know your thoughts, most importantly, down below in the comment section. Electric tweeted about 1 hour ago that Tesla puts the $25,000 electric car, codenamed NV9, on the back burner, despite what Elon Musk has said. A few weeks ago, Elon Musk responded to Zero Hedge's breaking news that Tesla was scrapping the low-cost car plans, and Elon Musk says Reuters is lying again. Electric says, as usual, there's more to the story. It's likely that Musk's blanket denial of the report is due to Reuters claiming the vehicle was scrapped or canceled. Electric can confirm that the program, which was internally called NV9, was postponed, according to sources familiar with the matter. Musk might take issues with claiming that it is canceled, in parentheses, in quotes, but the project is effectively scratched right now as Tesla is putting all resources into its self-driving effort. According to sources familiar with the matter, Musk told Tesla's team in Austin in December of 2023 that NV9, an expansion of Gigafactory Texas for the new, cheaper next-gen model, was a priority for 2024. However, the project was recently completely defunded, and many people involved in it were laid off as a part of the round of layoffs announced today. That's why Tesla stock is selling off more here in after hours. Instead, Musk said that he wanted Tesla to focus on the south expansion of Gigafactory Texas, which is going to house a giant data center for the Robotaxi project. According to people familiar with the project, it is already behind schedule, and there's serious doubt that it can be completed by the end of August, which is the timeline Musk has been pushing for. Now, here's the problem with this. You may read this or hear this and say, isn't that great that Tesla's focusing on Robotaxi instead of a couple thousand consumer deliveries of the Model 2? Get a couple thousand Robotaxis out on the road. I would love that a lot more than just a couple thousand consumer Model 2s. Of course, yes, that is good. But people are saying, hey, if Tesla's going to cancel the consumer deliveries of the Model 2, their track record, Tesla's track record for following through with their timelines is highly uncredible, non-credible. This means the Model 2 may not come for a very long time. The Robotaxi may not come for a very long time. And essentially, when the markets are 12 to 24 months forward looking, it's hard to bake in any valuation from either of those things today. The fact that Electric says they don't think the data center will be available by August 8th, I think that's no surprise, okay? I don't think anyone expected the Robotaxi to be up and operational by August 8th. If you did, sorry to burst your bubble, that's not going to happen. The soonest or earliest I'm expecting that, personally, and I want to be pretty conservative with this because the Robotaxi is a massive deal for Tesla stock. It is the end-all, be-all, the final destination. Yeah, it's going to be a long final destination, but you set path on that final destination when the Robotaxi network launches. I'm sticking with the second half of 2025. Any sooner than that, if we can actually get robotaxis out on the road and approved by regulators, that's a massive win. But I'm expecting second half of 2025, not August 8th. It's probably going to take until the end of 2024 just to get the data center up and running. All of this news here today in After Hours from Electric. Keep in mind, it is Electric. They've been wrong before. Everyone's been wrong before. We really don't know much until we know, which I'm sure we'll know coming on Tesla's earnings, in which this latest piece from Electric and the layoffs today, let's not forget those two top executives left Tesla today. Just strange. I mean, like, what the hell is going on at Tesla? We have a lot of questions. April 23rd is going to be a huge day. Now, this situation in regards to Israel and Iran is very important. It is very important for the broader markets. Now, for a multitude of different reasons, I'm not going to stick on this too much, but it is the driving factor of our markets right now. It's important for a couple of different reasons. Obviously, anything that has implications for the US fighting another country or getting involved in a conflict is bad. But it really comes down to oil, which has the largest impact on inflation, even on your core inflation. I've said this many times, but this water bottle, well, it was partly made with oil. This, these one-a-day vitamins, my favorite, Arizona iced tea, all of these things were manufactured somewhere else and brought to me, meaning that if oil were to go up, companies' input costs are going to go up as well, meaning their margins are going to fall. Companies don't like when margins fall. They pass on costs to consumers. That is inflationary in every single product and or pretty much service out there in the US economy today. Doesn't matter. Think about it like this. The Fed has done a great job in restricting housing, autos, lending, their tools. Their Fed funds rate has done a great job in restricting those areas. But the other aspect to look at this, if you did see oil go up and gas prices go up, you have this inflationary problem, but the Fed raising rates does nothing to fix that. But what rising gas does is it really impacts your Taylor Swift concerts, your football games, your individuals that cut the grass, right? It has a much larger economic effect than the Fed raising rates because it creates less money for people to be able to go out and spend in the economy. So an oil price shock can have a economic shock and a drag on economic activity. So at face value, people might say, well, oh my gosh, oil going up, that's inflationary. The Fed's not going to cut rates. But when you actually think about it, that is putting more restriction than the Fed could even dream on the economy. If, let's say, the price of gas goes up $1, $2, $3 a gallon, that's a problem and potentially even be a reason for the Fed to start cutting rates. They're already seeing a lot of pressure from the Senate that oversees them and creates their mandates. They're already getting letters on a daily basis to start lowering rates, let alone if the economy takes a hit from higher gas prices. Now, that is assuming this crisis does continue to kind of get dragged out and Israel and Iran get into a larger, more broader conflict that could have disastrous effects on the oil market because of the Strait of Hormuz. And I've pointed this out many times, but this is an interactive map, and I think the best one out there of oil tankers and where they go. And you can see this is including all the oil tankers in the world. All of it's basically going through the Strait of Hormuz, right? In one capacity or another. Couple coming out of here, couple coming out of there. But really, all of them are coming out of the Strait of Hormuz or going into the Strait of Hormuz. This is a choke point for oil. And if there were to be a conflict in Iran, it would kind of be like a Red Sea situation where, unlike the Red Sea, you can go around Africa. The Strait of Hormuz, the only way to get oil out in this event would be through Iraq, out through Israel, which wouldn't be the best scenario, or it would be straight through Saudi Arabia. And that's a lot of ground to try to cover. you're going to have an oil deficit out there pretty quickly if this were to spiral into something large. So again, this could be a nothing burger. This could all be over with tomorrow. Or this could turn into a situation where the world is short of oil. And that most certainly causes a recession. So when you have various outcomes that are this far between each other, the markets are faced with a lot of uncertainty. And that causes stocks to fall. And that is exactly what we've seen today. In fact, you finally got this break under the 50-day moving average. This is what I've been calling for a while. The writing's been on the wall. This was bound to happen. Now, I believe this would happen because of earnings, at least initially. And then this became more obvious as the culprit for the breakdown in the markets. But you do have earnings coming as well, in which if you look at some of your companies that report earnings this week, you have ASML. That stock has went from $550 or so in the October-November 2023 low to $954 today. Good luck impressing investors there. You have Netflix that went from $344 in the October-November 2023 low to $607. Good luck impressing investors there. You have TSMC, another big company, reporting earnings this week. Or TSM is the ticker. They've went from 80 some dollars to 140. Expectations are way too high. Way too high. Just judging off of the stock prices heading into those earnings, and you're basically set up for disappointment. And if Netflix and TSMC and ASML, your high-flying AI stocks, some of them at least, and Netflix deemed one of your big tech names, if they disappoint this week, yeah, the selling could get even worse, let alone this Middle East situation. Now, the next stop on the NASDAQ is going to be around to this 100-day moving average at about 420. I think 420 is going to serve as a little bit of support. You may chop around here, and maybe this could even happen before you get Thursday after our earnings from Netflix. And I think that will be a big moment for our markets. That is still about 2.33% downside. From here, this could potentially, happen because of this Middle East situation in and of itself. Now, a couple other factors influencing our markets as well. 10-year treasury yields are up over 11 basis points today, pretty much going straight vertical. And I think this is adding a lot more restriction to the economy than the Fed wants to see right now. And there's some people over on X, most notably, calling for the Fed to start lowering rates, maybe in some kind of emergency fashion. And if that were to happen, oh boy, you got problems on your hand. If the Fed cuts in any kind of emergency situation, that would not be great. Now, is that my base case? Obviously not. I'm not expecting the Fed's going to come out and start cutting rates. If they do, and I can make a logical argument to why they would, that would be problematic. And again, I know a lot of people are going to say oil going up is very inflationary. They're not going to cut rates. They don't know what they're talking about, okay? Anyone that says that has no idea what they're talking about. The Fed cannot control oil. The Fed knows this. The Fed's not stupid. At least I hope they're not. I hope they understand that. The Fed already has a lot of restriction on the economy. Jerome Powell wants to start cutting rates. He's basically begging to start cutting rates right now. The worst thing possible is being wrong to start raising rates, calling inflation transitory, and proven otherwise. And really the second worst thing is being too late to start cutting rates. You get an oil price shock or whatever happens, and you enter into a recession or a weakening economy. That's not optimal for Powell's legacy. That's not how he wants to go out. Let me tell you that right now. And all of this pressure on the economy and an instability in a very uncertain world that we are in right now. I don't think the Fed is seriously considering coming out and cutting rates right now, but give it a couple days. If the markets sell off, 10-year treasury yields continue to rise, geopolitical tensions get worse, and oil rises, yeah, the Fed will come out and cut rates. Mark my words on that. Just a couple more days like we've seen today, and the Fed will come out and cut rates. If you take a look at oil markets, historically, oil can be a huge catalyst for the economy, most notably back in 2007 through 2008. Really, the first 4 months of 2008, oil went from $101 per barrel up to $140. I mean, that was a big jump. And you can make an argument that that caused a huge effect on the economy in an already uncertain time at that moment where banks were failing. But again, long story short, if the Fed did come out and do some kind of emergency rate cut, it's not going to happen tomorrow. It would be some time from now. Then I would expect markets would sell off pretty aggressively on that news. Maybe 5 to 7% in a single day. Again, not my base case. I think there's probably a 5% chance or less, but you can make an argument for it. The Fed has slowed down one area of the economy, lending, autos, housing. Oil going up, gas going up can slow down the other part of the economy that the Fed's tools cannot touch. Again, whether or not you go to a Taylor Swift concert, whether or not you go on vacation, whether or not you travel the country or work as much, no matter what it is. I mean, if you leave your house, if gas goes up, that is a problem, right? That is costing you more money. That is less money you are going to spend on other things. And yeah, that's kind of the argument that I'm making here. And again, I'm not the only one making this argument. I heard this on X first from other fund managers, and it does make a lot of sense. Iran said about 1 hour ago they will not show restraint if enemy aggression crosses red lines, says their military advisor. And you can also see that Iran's strike, quote, will be met with a response, says Israel's army chief. And he told soldiers that and commended them for defending Israeli airspace. But again, in regards to Tesla, when it rains, it pours. It continues to get worse. If Tesla goes under 160, that's very problematic. Right now, Tesla stock is at about 161 here in after hours. Really, 160 has been an important level of support, but based on my charts where this trend line is, I actually have your next level of major support as of right now around 155. So if you break under 160, 155 would be the next level of major support I would be targeting. If you break under this trend line, that's where you can fall into the high 140s. And then if things were to get really bad from here, then you fall into the 130s. As far as tomorrow, 8:30 in the morning, we do have building permits that will be coming out. Not expecting that to give much of a move to our markets. You do have some bond auctions coming out, manufacturing production, month over month and year over year. None of that I'm expecting to be too important. Some data coming out from Europe, the unemployment rate tonight out of the UK. Really, nothing that I'm too concerned with. The inflation numbers out of Canada could be important. It may or may not give our markets a reaction, just given, you know, our economies, our proximity is relatively, you know, close and similar to Canada. But I mean, is that going to be a big catalyst for tomorrow? Probably not. You do have earnings coming out tomorrow morning with Bank of America, United Health Group, Johnson & Johnson, Morgan Stanley, BNY Mellon, PNC, Mercadal, Northern Trust, Ericsson, and Commerce Bank. Keep in mind, the main thesis of our markets right now, if you are a bull, is earnings are going to come in good, and that's why you want to own stocks. Well, Good is expecting about 5 to 6% EPS growth. You started off 2024 with the expectation of 11% or higher EPS growth. Expectations have went down a lot. Stock prices have not. That would suggest the stocks themselves are priced for better than 5 to 6% earnings growth. So meeting expectations is probably not good enough. But again, these banks are going to give us a lot of insight to whether or not people are continuing to spend money, and if people, well, are not spending as much money, if that's what the banks tell us. Specifically, I want to see Bank of America and PNC. I think those two will give us the most insight to how Americans are spending their money. If they have negative things to say about the consumer, then that's problematic for the rest of earnings season, in which Wednesday is going to be an even bigger day than tomorrow. Thursday is going to be the biggest day of this week. So let me know what you think about this information down below in the comment section. Also, keep in mind, it's been over a year now since you have seen a 2% pullback in the S&P in a single day. So it's been a long time since you've had a large pullback, and likely overdue for that at this point. Thank you for watching. Hit the like button, subscribe to the channel, and let me know what you think about this information down below in the comment section. If you guys want to come join the trading community, check out that link down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.